Welcome to Edison TV. I'm here with Catherine Sutton, Head of Investor Relations at Amara Mining. Morning, Catherine.
Good morning.
Firstly, could you tell us a bit about what Amara Mining does?
Yes, Amara is a West African-focused gold producer. We take a portfolio approach, so we have assets at all stages of the growth pipeline, spread across 3 countries in West Africa.
Catherine, could you tell us a little more about Amara's 3 main assets?
Kausaka Sega is really the cash engine of Amara. It produces cash flow, which we then use to fund our exploration and cover our G&A costs. It's not really the reason you'd invest in Amara, though. The real sex and violence of the company is in our growth assets, Bamahan and Yaouré. Bamahan forms our near-term growth. It'll be a 100,000 ounce per annum producer with a mine life of 10 to 12 years. And that's really going to transform Amara into a more sustainable producer. And then there's Yaouré, which forms our medium-term growth. That has the potential to be even larger than Bamahan, but obviously it's a few more years out, so that won't enter production until 2017 or 2018, but obviously it does form an important part of our growth.
What is the timeline for production for Kausaka Sega, and would you expect any delays?
Kausaka's been in production for the last 5 years, but its mine life was due to expire this year, which is why we felt it was important to acquire another deposit close to Kausaka to extend production until production then begins to our asset in Sierra Leone, Bamahan. We're intending to do the integration of the 2 assets in Q3. However, there are obviously risks to that timeline.
So would you expect any delays with that?
We're obviously hoping that everything will run smoothly and we'll be able to begin the integration in Q3, and then obviously production will begin from the Sega deposit then. However, you always have to be prepared that there could be delays, and we see permitting as the biggest risk in this process. So we've delineated extra ore resources at Kausaka so that if the timeline at Sega is delayed, we can process those resources and production can continue until the end of the year just from Kausaka. And that would mean that we'd still hit the bottom end of our guidance range of 50 to 60,000 ounces just from the Kausaka ore. So obviously that gives us some comfort.
A full feasibility study of Bamahan is due in June of this year, but it's already been put back several times. How confident are you of meeting this deadline?
I'm very confident that we'll meet the deadline, and the reason for that is the new management team. Since John McGloin joined Amara as executive chairman in May of last year, he strengthened the board, the management team and the operational team. We've hired senior mining engineers from Teranga and Randgold, other very successful West African companies, and they're now managing the process for us in-house. So instead of relying on consultants to put together the model and then dictate the guidelines and timelines and targets for us, we're now responsible for those in-house. And that gives me a lot of confidence that we'll be able to meet the deadline of June for our feasibility study.
And have you taken any measures to reduce your costs?
Yes, we've actually maintained very tight control of our costs at Kausaka, even though the production there is very small. However, the real opportunity for managing costs will come when we develop Bamahan and Yaouré, as both of those projects have the potential for hydroelectric power. Yaouré is particularly well situated as it's actually 5 kilometres away from the 3rd largest body of water in West Africa. And on that lake, there's an existing hydroelectric power facility. And when we were operating a small mine in Ivory Coast a few years ago, we were paying just 5 cents a kilowatt hour. That compares very well to diesel fuel, which is 30 to 35 cents a kilowatt hour, or even heavy fuel oil, which is 20 to 25. And that'll really allow us to decouple our production from the oil price and maintain very healthy margins.
So what is the long-term development plan at Yaouré?
Yaouré is a really exciting project for us. We just announced a resource update for the project in Q1 of 2 million ounces, but that only covers 40% of the total volume drilled. So we're expecting to delineate a further 2 to 3 million ounces at the project in the second half of this year, which will bring it to 5 or 6 million ounces, making it a really significant part of our portfolio. So for the rest of the year, we've commenced infill drilling to get that further resource. And we're also going to do a PEA, a preliminary economic assessment, to demonstrate the project's economics, which we think will be very strong given the hydroelectric power, excellent infrastructure in the country, and the fact we've already got a mining licence for it. Next year, we're going to look at a pre-feasibility study and obviously upgrading the resources to the measured and indicated categories. And then 2015, we'll put together the full feasibility study to enable us to begin production there in 2017 or 2018.
Can you tell me how you'll finance your capex and if there's any risk of diluting shareholders?
The Bamahan capex is estimated at $200 to $220 million. In September of last year, we signed an agreement with Samsung, and they've said that they're interested in funding the majority of the Bamahan capex, which we see as being 50 to 60% of that number. Obviously, that still leaves 80 to 100 million that we're going to have to fund through a different means. And our management have said categorically that at this share price, they will not go back to the markets as it would dilute our shareholders too much. We're not at the stage yet where we're looking at other options as we haven't released the feasibility study, but once that is delivered to the market in June, we'll start to look at other options. And, the Samsung deal was very creative. So we've demonstrated that we can think creatively to benefit our shareholders, and we'll be looking to do something similar for the remaining portion of the capex.
Is Amara a takeover target?
I think at these prices, most companies probably are takeover targets. Amara has 15 analysts covering us, and 12 of those are buy, 3 are hold, with target prices ranging from 34 pence to £1.46. Our current share price is 30 pence, so the market can clearly see there's value there. We're obviously not looking to be taken over, as we think the company has very strong fundamentals and we'd like to develop it ourselves, but of course it's on our mind at this share price.
And what premium to the current share price do you think shareholders and management would accept?
It's very difficult to say. We haven't received any formal approaches at this time, but obviously if we did, the management would assess them and then decide if it was in the best interest of the shareholders. Our aim, though, is to develop Amara into a mid-tier producer ourselves. We feel we've got the right people, the right assets, and we've got existing cash flow, which gives us some flexibility. So it is our intention to develop into a mid-tier producer.
Catherine, thank you very much for joining us. And for more information, please visit the Edison website.